Hello, traders. It's 8:02 a.m. Chicago time on Tuesday, the 16th of March, 2021. This is episode number 1955. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's dive right into it here today. Into the convergent trading pre-market summary sheet, we could see that the risk sentiment is relatively neutral. We're seeing both sides playing out. The DAX leading the pack today, up 0.6%, followed by the Nasdaq up 0.54%, 70.5 points. The bonds are up 10 ticks. The yen is up. Gold is up. 10 years up. And the Bund is up. So those last ones are safety instruments or protection assets, and they're up. Silver is down 0.87%. Copper's way down today, and crude oil is off 2.14% or so. At least that's what it says on my end in the April contract. Russell's off, Dow's off. So what we have is a mixed bag. The S&P is up 2.5 points, 0.06%. So the Nasdaq and the S&P being up, the Russell and the Dow being down. The bonds and notes are up, the Bund is up, and silver's down. Yet gold is up. So it's a mishmash of things, and that's what we're coming into today after the rally yesterday. Carrying forward, the key elements driving us around are putting focus back on the Fed. Wall Street futures and global equity markets rose as investors anticipated the U.S. Federal Reserve and other central banks meeting this week will keep policies accommodative to help drive a post-pandemic global economic recovery. And so that's where the focus is. Yields, monetary policy. Is there going to be further purchasing of assets on the long end of the curve? And so on and so forth. So this is from Reuters or Refinitiv, and that's where we stand here. Looking at the calendar, you see the events in front of you. I don't need to go over those. I want to dive right into interesting. Dive right into the S&P. Looking at the S&P overall, currently the S&P again is up slightly, just 3.5 points. We're teetering around yesterday's close after the rally, after the break higher into all-time highs. Been holding steady. I do have the volume. Sorry. The volume's actually not this high. I have to check on this number here. I have 156,000 in the June contract. Remember, the front month is June, and of course, as a reminder, we do have expiration this Friday, and it's rollover week. Very special week. A week that is generally marked by a little bit higher volume, and roll activity, calendar spreads. And remember, calendar spreads take precedence in most exchanges. They take precedence based on a timestamp, and because they're not tied to price, you'll find that calendar spreads are being filled ahead of you in the queue, despite the fact that you may be the next in line. If the spread has the right price, then the calendar spread will go off before you, depending on when it was entered into the system. So just overall, just remember it's just an odd week, this quad witching Friday and rollover week. So it's like I said yesterday, and I tried to emphasize very strongly, this is the type of week where you don't press, and it just makes sense to be patient and calculated about what you're doing. So that's that. Let's move on to the review segment. I'm going to switch this to full screen. Yesterday, the expectation was that we would. What? What is going on here? Here we go. Let's get it going again. Yesterday, the expectation was for a pretty choppy, quiet market. Expected it to skew down towards yesterday's range, specifically towards the 39.25 area for a pop later in the session. But I didn't expect it to break out like it did yesterday. It ended up pushing all-time highs. So I was looking for a chop for most of the session. Um, and a quiet Monday. This is generally a pretty a Monday that's traditionally low volume, low range, low volatility, and that's pretty much what we got. Here's what actually transpired yesterday. Look at this chop. This is what I warned about. This is very, very typical. I expected it to skew down, as I said, into the 39.25 area right here, into the point of control, the shelf that was left behind on Sunday, and that's what we got. We got this terrible chop. It's really a scalping market, trading from the outside in, and then we finally get a push, an impulse down, which to me was a bit surprising. We get this impulse down, a release to the downside. We ended up with a 21.5 point rotation down, 21.5 points down, and then we respond back, and it sets us up for this pretty decent trade right in that 26 area. We had the IB low. We had a lot of structure from back here. And what does it do? It squeezes through, and it continues to squeeze through, and it continues to squeeze through. This isn't a run. It's a squeeze and a squeeze and a squeeze. And we end up going neutral, breaking the initial balance high. By the way, the IB yesterday is the lowest we've seen in months, 13 points, and then finally pulls back to the initial balance again before the run higher. Note the size going off near highs. A lot of volume went off in that 39.58 area to close near highs. So what we ended up yesterday with is neutral, extreme up. Neutral, extreme up. This is an indication of strength. This is likely to show us a market that is likely to pull back if it does, but it's not done. This market is not done to the upside, or not likely to be done to the upside. You can see the delta is going with us. Of course, we take delta with a grain of salt, which reminds me to show you this chart. This chart here, which I just posted on Twitter. Here's the pace of the roll so far. This comes from CME. This tracks how the roll proceeds, and the average is dashed. The min max are the bands, and what this is showing is, in general, about 78%, 78 to 80% of the volume in the old contract rolls into the new contract, which through deduction, it means that that about 20% settles, and it may settle against other positions, against options or other assets. But the fact is, we have actually arrived at that level. We're close to 78% done. If we follow the average, if we follow the upside, which is around 82%, it doesn't matter. The fact is, we're about 90, 95, 96% done with the roll, and it's the beginning of Tuesday. And this means that we have rolled extremely quickly here. I have not seen a roll occur this fast. in a while. And what we've done is we've rolled to the June contract well ahead of schedule. You could see it catching up quite a bit yesterday and the day before. And so what does this play into? This plays into the fact that our volume and our delta are now something we can lean on because a lot of the volume is done. A lot of the movement from the June contract to the from the March contract to the June contract is done. Whether longs in March want to sell March and buy June to hold their longs in June to maintain that position, or shorts in June are buying back, or shorts in March are buying back March, selling June to push their position forward in time to the next expiration. I don't care because at the end of the day, all I'm interested in is how is the roll going? Is it done? And to me, it looks like it is pretty much done. So I'm going to start looking at leaning on the Delta read once again. So I'm going to be paying attention to how the delta is moving, and the size that's coming in is likely to trade out. This is really important for today, for our trading today. So we can see there's a lot of buying into the close, strong delta with price. And this looks to me like an impulse. We're likely to get a continuation. Here it is in the bigger picture. Let's kill these levels here. You can see it in the bigger picture. We've pushed down, and then we've broken higher, and we've been consolidating all night, holding this high volume node from yesterday as the point of control overnight. And to me, it looks like it is not likely to give up these prices very easily. We have decent support below us at the 47, the 48 even. Pay attention, 48 even is the breakout price. This is the breakout price. It was a triple top from the overnight session. This is a 30-minute bar chart. There's a high there, there's a high there, there's a high there, and there's a lower high tucked in there, and it ties into the high we put in on Thursday. This area is expected to show support. If it does not, if it falls through the 48, it's likely to accelerate quite rapidly into the 39.30, where we have a little bit of volume showing up, and then from here, if it gives that up, it is likely to push through and get down into that back into that 38.90 area, which has quite a bit of bounce, quite a bit of volume down there as well, and that's how things are mapping out. So we have to pay attention to how this thing responds today, and if it just continues to push higher. To me, this looks like a push and a rising flag here, and it is likely to resolve to the upside, but we'll see. I'm not married to any particular direction. I want to remind you again that we are in the middle of quad witching week. Anything can happen. We have the influence of the Fed and central banks doing whatever they're going to do to stoke things, to stoke the economy. So that's where we stand. Here's the big picture. The big picture is we ended up taking a pause here. We had a breach of the one-time framing on the daily, and now we're pushing higher. So we've put in a higher high on the week with a higher low against yesterday. So until this changes, until we get back again below this 49 area, the 48, 49 area, and then start tackling this area 39.05, 39.08. It is really all indications are to continue higher towards that millennial figure at 4,000. So that's where we stand. There's no sense in fighting this. I will take short scalps, but the structured positions today are going to be long, right? I want to be on the side that is supporting, that gets the most support. Let's switch gears and take a look at what's expected for today, and we'll wrap this up. Here we go. Okay, so what are the expectations for today? So yesterday we expected some heavy chop, a lot of sideways action, which we got through most of the session, and then we broke out at the end of the session. Um, and so this morning, what are we looking for? We're looking for a response back. Let me just double check the overnight inventory. 1 second. Let me pull up my overnight inventory chart. 76.5% long. Expecting a choppy open, responsive selling into the overnight point of control. Chop, 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 chop. We have that all-time high we put in yesterday at 60.50 right here. Looking for it to respond a little bit and potentially hold sideways before it starts to turn up. Notice yesterday that the all-time high is actually sitting on top of the next measured move up. So we respected the measured move at 46, I think it was, and then we've pushed to 60.50 on the dot. We have a measured move there at 60.50. It's quite amazing that these things hold, actually. The next measured move up is 65.75. Looking for a breach of that, a test up into potentially 75 for the day range stat, and that's what I'm looking for on scenario 1. Scenario 2, if the market sees this as rich, open auction, push the overnight high, squeeze up, impulse down, come back into the range, test the overnight point of control in the high volume node from yesterday, and start looking to reach down into that 48 for a test, which sets us up for a rally tomorrow if it doesn't happen today. These are the two key scenarios. These are the two key scenarios to play with. If you're confused by what I'm talking about, if you're confused by the auction, and I cannot overemphasize how important it is to understand the auction. I don't care if you're trading crypto, CFDs, Forex. Forex is a little special because you're actually trading against your dealer, against your broker. Not an area not something I would want to do myself. Or futures or whatever, even options, in my opinion, understanding the auction, understanding how the market confirms prices through volume and rejects prices through lack of volume, which is demonstrated in the volume profile, and understanding how the price discovery process works is so important. You can get away, in my opinion. I've been doing this for almost 21 years. I've seen um, I've seen traders come in and they are confident in some sort of a systematic approach, moving average, crossover, CCIs, RSI, that sort of thing. But as soon as you put on some size, that confidence kind of wanes away. And coming in and using, say, a reversion indicator like the RSI and CCI and so on versus a momentum indicator, if you don't understand what the market has done and what the narrative is of the auction and what it's setting up to do, what has it done, what is it trying to do, if you don't understand that, then you don't know when to ignore that RSI. Oh, that RSI is reaching 90% on this rally. It's overdone. Well, guess what? It can go another 30 points in that direction for the RSI to now compute that it went up another 2% on the indicator. It's useless, in my opinion. So it's better to understand the narrative and the underlying and then apply that. And as you can see on my chart, other than the VWAP mid, there are really no other lines. I'm looking at VWAP mid, and those are the lines. That's these lines and these lines. Everything else is straight up. Everything else is straight up volume and price, volume and price, volume and price. And that shows up in the form of delta, and price shows up in the form of zigzags and the bars in front of you. And it's called trading naked, right? And so This allows me the clarity of just seeing what price is doing and how it's rotating back and forth and what it's attempting to do. And it's okay to be wrong. Our goal here is not to be correct all the time. That's a very futile pursuit, in my opinion. Hopefully, you'll pick something up today. Good luck, and I'll catch you tomorrow morning. Take care.